Hey, this is Kyle at ProjectionHub, and today I'm going to be talking about what are the 8 things you can do to increase your likelihood of getting approved for an SBA loan. Now, who am I and who is ProjectionHub? So ProjectionHub has helped more than 50,000 small businesses and entrepreneurs create financial projections for their SBA loan applications and their business plans and their pitch decks and you name it. And before my time with ProjectionHub, I was actually an SBA loan officer for 7 years. And so I know what that process looks like. I helped people prepare loan applications, go through underwriting, approve, decline loans, and just kind of firsthand experience doing that. As well as ProjectionHub's founder, Adam, was an SBA executive director, a lender, an SBA lender executive director for over a decade. And so he has brought a ton of experience to what we do here at ProjectionHub and how we can provide that kind of advice. And so in this video, I'm going to focus on those 8 key points that I think will really be helpful for you to know as you prepare for the SBA loan application process, and as well as give you some pointers on some other tools and helpful guides and things you can do to help in that process. So without further ado, let's go ahead and jump into it. All right, so here we are. And I failed to mention in my introduction to this video, if you have any questions at all about preparing for your SBA loan applications or making sure it's ready to go or a component of it, just contact us at support@projectionhub.com or comment in this video below. We are happy to help point you in the right direction. So I've got our SBA loan checklist pulled up here because I need the background for this video. And there's parts of this that would be helpful for demonstrating what I'm going to talk about today. You can grab this in the description of the video below if you'd like to. There's a lot more information here than we're going to cover today. But if you're curious about how to improve your SBA loan application, you're probably curious in a loan application checklist to make sure you've got everything ready to go. So there you have it. It is out there for you if you'd like to. So in this video, I'm going to assume you've prepared all the documents, you've identified a lender, and maybe you're getting ready to hop into actually applying. You just want to make sure you have done everything you can to increase your chances of getting an approval. I know from firsthand experience on the lender side of things that it can be really exhausting for business owners to go from lender to lender and applying and going through that process and answering all the questions and getting 6 weeks into the process and then getting declined. And I just know that is really frustrating. And I apologize on behalf of lenders everywhere for that experience. But hopefully what I talk about today can help you avoid some of that. So I'm not gonna make this a really long video. So without delaying this any longer, let's go ahead and just jump into it. Okay, so the first point probably sounds obvious, but be prepared. Have as much documentation ready as you physically can. Now I have another video, which is just how to get an SBA loan in general. We've got a bunch of other videos coming out about how to get an SBA loan for specific industries. So you may check that out for a deeper dive on some of these things I'm going to reference right now. But even just using this checklist as an example, this goes through a lot of details, including the documents you need for a loan application. But in those videos, I kind of talk about the fact that you can't possibly prepare for every single thing your lender is going to ask you for, but there is a very big chunk of the documents that you definitely can give them, especially the ones they initially need to get into underwriting. You can have those ready to go. You can have your personal financial statements, your tax returns, your business plan, your financial projections, those kind of core documents ready to go. And so this checklist will help you point out some of those things. There's going to be SBA forms that you can't possibly prepare for that your lender will have you fill out, or they're going to have their own credit release form you have to fill out and all of that kind of rigmarole. But there is a lot of stuff that you can have prepared. So do that. If you contact your lender and they say, we're going to need this long list of things, a lot of times they do that with the assumption that you're going to go away for a couple of weeks and then come back. But if you've got everything ready to go and you're like, all right, let's get this thing going, I'm on a schedule, they're going to appreciate that. And they're going to realize that you mean business and you're serious about that. So that's point number 1. Be prepared. Have as much documentation as you possibly can for this will kind of show you. And then when your lender requests more, get it as fast as you can. Lenders, nothing is more annoying, I guess, than when an applicant says they're ready to move fast. And so you try to move fast and then it takes them weeks and weeks and weeks to get you the things they need. And then they expect an immediate turnaround. So your lender can only move as fast as you can. So there you go. Point number 1. Point number 2, and actually I'm glad I have this open, will be a good example, and that is having the right expectations. Different lenders have different appetites, have some different rules, different processes, but when it comes to the SBA, there are some mandatory things that you need to follow, and just lending in general to understand that. And so I'm going to hit on just some of the few things that I saw as a lender that often tripped people up and put them off a little bit because they didn't have the right expectations. First of all, you're going to have to personally guarantee the loan. If you're the owner, primary applicant, you own more than 20% of the business, you will have to personally guarantee the loan, especially if it's an SBA guaranteed loan, which I won't go into a bunch of detail on what that is now. But if you're applying for a 7A loan at a bank, that's an SBA guaranteed loan. A lot of times people think that they can keep the personal and the business separate, which is great advice for bookkeeping, bank accounts. Not realistic advice when it comes to applying for a loan. You will be signing your name personally. So if the business fails to pay back that loan, you will be responsible for it personally. So have those expectations. Second, collateral. Now the whole purpose, one of the main purposes of an SBA loan is that the SBA is helping mitigate the risk for the lender, for the banker, for whoever is the SBA kind of lender or intermediary in that example. And so typically that means they have less collateral needs. However, that lender is required by their kind of agreements with the SBA that they have to get as much collateral as they can. And so if your business has a bunch of collateral in it, they're going to file an all business assets filing. They're going to get, liens on as many titled pieces of equipment or cars or whatever as they can related to the business. But if there's a significant collateral shortfall in the business, they are going to request personal collateral. So whether that's a second mortgage on a house, a free and clear car, a boat, whatever they can get their hands on, they are required to ask for that. So if you've got personal collateral and the business has zero collateral, don't think you're going to get away with not providing that. And if you're not comfortable with that, that's okay. You just aren't going to move forward with that loan request. But have those expectations. They're going to try to collateralize a loan. SBA loans doesn't just mean no collateral. Owner cash investment. So if it's going to cost you $100,000 to get your business up off the ground, the lender's not going to give you 100% of those proceeds. They're going to give you, if you get approved, you might get 80% of that or 90% of that, but you're going to have to come up with the other 10 to 20% of that. Maybe even more if the lender has some concerns about the loan request. So keep that in mind. You're going to have to source some of that cash. You could borrow that cash, but whoever you borrow it from has to get paid back after the bank or the SBA does in that case. What else do we got here? Your deal will need to show sufficient cash flow. So many lenders, especially bank SBA lenders, want to see a debt service coverage ratio. That's what that stands for. Greater than 1.25. I'm not going to explain exactly what a debt service coverage ratio is. You can look it up, but it's essentially a calculation that proves that the business can continue what it's doing, or it will be able to when it starts up, and will be able to afford the loan payment. So it needs to prove that there's enough cash flow in the business to continue operating as well as pay for the loan. And so that's the thing you want to make sure you have in mind. And then lastly, that your business is eligible for an SBA loan. So again, you can grab this, look at this link. There are different types of industries that are ineligible for SBA loans. There are personal things that can disqualify you for an SBA loan. There are things you can't use an SBA loan fund for or loan proceeds for. So keep in mind those things. Okay, so that was a long point. Sorry, have the right expectations. We'll move quicker now. Third, find the right lender for you. If you're working with a loan broker, just be mindful that they are incentivized to work with certain lenders that are going to pay them a certain fee if they source a loan for them. So it may not necessarily be the right type of lender for you or for your industry, or the one that has the highest chance of approving you. Two, your hometown bank, even if you've worked with them for years and years and years, may not be the best person for your type of business. They may be less familiar with your type of business or have a worse track record with approving them. Again, we have other videos. Even one is actually linked here. I'm glad to have this checklist open. Linked here on how to help you find an SBA lender in different types. So find one that is experienced at lending to business of your stage, your industry, your state. That will be helpful for you. Let's see here. Okay. Share the dirty details, share the dirty laundry early in the process before you get much further into the process. It will save yourself time, energy, potentially embarrassment if you get to a certain point and you didn't divulge certain things like criminal history, reasons why your credit score is the way that it is if it's lower, confusing financial line items on your financial statements if you're trying to hide something or do something, tricky with that. If you have a significant portion of cash in the bank that hasn't been recognized on a financial statement or paid taxes on, that kind of thing, make sure you divulge all of that stuff up front and provide documentation if there is any related to that. Accurate financials and realistic financial projections. So again, kind of like I just talked about with your financial statements, if you have an existing business, work with an accountant or make sure you've done the work that those are accurate and you're not hiding anything there or things aren't categorized. And then realistic financial projections. Once you've created your projections, you can work with someone like ProjectionHub to create those and ensure that they're accurate and realistic, but do some research to make sure those are comparable to industry benchmarks and aren't super out in left field, because it's really hard to undo a bad impression when it comes to your financial statements or your financial projections with a lender. If they look really bad when they get them the first time and you say, oh, hold on, I'll just go fix those real quick. That's kind of a red flag for a lender. So make sure that they're right the first time you give them to them. Ditch the long and generic business plan. If you're, trying to acquire a business or start a business, make sure your business plan only contains the information it needs to and that is actually helpful and useful. So short and sweet, useful, demonstrate the actual market opportunity and any research you've done to prove that, demonstrate any traction you have, or, how you're going to actually demonstrate how you're going to get customers in the door. We have a bunch of free business plan templates. They're actually linked on here. Like if you're a startup, I think I actually have the link open here. We have a bunch of free business plan templates. In those business plan templates, we have a video done by yours truly that talks about each industry and ways to make your business plan as good as possible. And I do talk about the market research and the traction or the customer acquisition in there a lot. Okay. Strengthen your application personally. Okay. So this will be adding outside income to your application that is not tied to the business. So if that means, a lot of people think the lender wants them to quit their job in order to be fully committed to the business. In some cases that is accurate, but if it is not required immediately upon startup, keep your day job. That income is really helpful for all of the ratios that the lender is trying to calculate. And if you can afford the loan personally, if the business can, you could also add a co-signer. That person is not connected to the business and can help repay the loan. If not, again, we've already talked about collateral. So if you're doing the work, it's not necessarily just give those things willingly to the lender, but be prepared to have those options. That will help you move quickly. If the lender has concerns, you can say, okay, well, I understand you're concerned. Would a co-signer help this? Or if I kept my day job, would that help? And just know what you're prepared to offer for that. Kind of keep that in your back pocket. And then lastly, make sure, if that's especially in a startup or an acquisition, make sure that the owner, if that's you, or the owner or the leadership team has ample and relevant experience. So the lender wants to know that you know what you're doing and you know what you're getting yourself into. And so if you as the owner possess some of the necessary experience or skills to do the thing, but not all of it, you need to supplement that with a partner or a key employee or a very involved mentor or something like that. The last thing you want is you don't want your lender to be concerned that you're in over your head or you don't know what you're doing. So especially if you're starting a business that has very little to do with what your job was, your day job, like connect those dots, what strengths and skills transfer. But yeah, you just really want to demonstrate in your business plan who your team is and that you're capable and you know what you're getting yourself into and you're primed and ready to do what you say you're going to do. And there you have it. That's probably felt like more than 8 key points, but 8 long-winded points about how to make your SBA loan application as good as possible to increase your chances of approval. Again, if you have any questions, please contact us at support@projectionhub.com. Leave a comment on this video. We will get to it as soon as we can, but we answer the emails very quickly. And yeah, give this video a thumbs up if this was helpful to you at all. Consider subscribing to the channel. We've got a lot more information to help you as a business owner and as you start and grow your business. So we will catch you in the next one. Thanks.